Okay, this chapter is about GST. Now, what does GST stand for? GST, G stands for goods, S stands for services, and T stands for tax. So we call it as goods and services tax. The short and abbreviated form is GST. Now, this is the new form of taxation in India. Earlier, we had different ways that taxes were collected. So we used to collect, in fact, not we, the government used to collect tax in the form of earlier as like sales tax, right? Now, and later on, right, it was changed and something like VAT came, that is value added tax came into the scene after sales tax. After VAT, now the new type of taxation is which is GST has come up. Now you can see they have mentioned in it, before GST there were 13 different indirect taxes in India. Okay, this is a kind of indirect tax. Why indirect tax? Because when we charge a sales tax from a person, say if this is a shop, right, and the customer is here, he bought something from the shop, right? The shop, the shopkeeper had sold something to this person, say a t-shirt, and say if the t-shirt was for say 100 rupees, he charged 10% tax on that, or say 12% of it. So how much is that? 100 rupees that he has collected, and plus 12 rupees is that 12% of this 100 is 12 rupees that he has collected as a tax. Now he has collected the tax from the person because he has bought it, or we can say he has sold it, and that 12 rupees, right, will go to the government here. It will go to the government, fine, and this 100 rupees belongs to the shopkeeper here. So he will keep this 100 rupees, which is the selling price, and extra 12 rupees which he has got as a tax will go to the government. So he has, the shopkeeper has collected the tax on the behalf of the government here. So the government is not getting the tax directly from the customer, but he is getting it through the shopkeeper. So this is why we call it as indirect tax. So sales tax, VAT, GST, these are all indirect taxes. It's the same way. Now, okay, the shopkeeper, then after sales tax was abolished, I mean, new format came, that was VAT they used to collect. Now after that they will collect GST in the same manner and give it to the government there. So before that there were 13 different indirect taxes in India. Out of these, okay, it was say difficult to like manage 13 different kind of taxes. The government then decided, why should the customer be paying 13 different types of indirect taxes, right? Say it was like, say earlier, for example, say there's a state called say Maharashtra, and there's a state called here Karnataka, for example. Now if somebody buys something within the state, then he will pay the tax, or she will pay the tax to the government there in the Karnataka only. But if he has bought something from Maharashtra, then the person will have to pay the tax to the Maharashtra government also, and to the Karnataka government also, right? Fine. And then there was something called excise duty, blah blah blah. There are different types of taxes which were there. So government then finally decided last few years ago that yes, that we should not have these different types of taxes which will make it very complicated and makes our say items that is being sold to the customer be costlier. To make it more simple, they said one tax will be collected and we call it a GST, one single tax. Whatever share belongs to the government, right, if it say there is certain amount of share to the government, then yes, it can go to the Karnataka government or to the Maharashtra government, or even the central government will take the tax here. Okay, so all those taxes were combined into one, and we call that as a GST, which is called as goods and services tax. Now here it is levied by central government and state government. provide a single and streamlined process. GST is a common tax for goods and services. So it's not like the service tax will be different and goods tax will be different. Same thing, GST. The tax will be implemented at every step of value creation. Now this is the important line. Tax will be implemented on every step of value creation. See what happens here. What is value creation? Okay, on the basis of C, earlier we had something called VAT. You understand this concept now here. What happens in value creation? For example, you must have seen a river, right? Beside the river you will find sand. Now somebody can tell me what is the value of sand in the river bed? No value at all. It doesn't have any value. But if the same sand is brought to a city, it is brought to a city. Where is it? This is the city, right? A person, he brings it from here and he brings it to the city. After covering say 10, 15 or 20 kilometers, the sand has been brought here. So he had taken a transport help and brought it from there to this place. City, the people who wants to build houses, they need sand. So now it is useful for the person. So he can pay a certain amount of money to the person who has brought it. So the say maybe a person A who brought it from this place to this place has added value to it because now it has certain cost. Maybe he can pay say 20,000 rupees for that entire truck of sand. Okay, so fine, this is what is the value addition. So it doesn't have any value over here, but once it is carried and transported to the city, the value has been added. One example. Another example, you see, you must have seen a cotton. So cotton is lying here. It may not have a certain value, or maybe it has, even if it has some value, say it can be this amount of cotton cost maybe 10 rupees. 10 rupees is the cost. Okay, now 10 rupees is the cost. Now if that cotton is brought to a machine or to a factory where it can be converted into thread, what is this converted into? Thread. You must have seen thread. Fine, it's a thread. Clear? This is thread. So some machine or man himself has done something to make it into a thread. So now this will cost maybe 100 rupees. So what is happening here? Has it not created a value into this cotton? Yes, he has. Now the same cotton goes to a textile factory, and here it is made into clothes. So there's a machine or man involved on it, and what does it do? He makes it to cloth. It's a cloth now. Now the value has become 1,000 rupees. So say it was planted, we got 10 rupees earlier the value, and the person here A has used machine to make it into thread. He had made it a worth for 100 rupees. So has it not added a value of 90 rupees? Yes. Then again this 100 rupees went to a machine, and some man, worker over there, right, those they made it into what? A textile, some cloth, and the value of this 100 has become 1,000. So has he not added 900 rupees? So every step some value has been added to it. So the moment a value has been added to it, a government requests and wants a tax on it. Is that okay? The government wants a tax. For example, somebody grew the crop of cotton and it is worth 10 rupees. Say, I don't have any idea like if they ask for tax for growing crops or not. Maybe exempted sometimes. Okay, we don't have to pay tax for everything, but yes, maybe exempted in case the government wants a tax. So for example, he wants 10% as a tax on this one. So what will he do? He will pay a tax to the government 10% of 10 rupees, which is 1 rupee, as a tax, okay, to the government. Why? Because he has grown cotton crop here. Now, so he has added value to it. So the person, okay, say if the person is, say, the farmer, he has added some value to this, so he will pay rupees 1 rupees in tax. Now, since it has come, who has created more value to it? A has created more value by adding it and making it 100 rupees worth. So he will also pay, say, 10% tax. So 10% of 100 is how much? 10 rupees. So he will pay a 10 rupees tax to the government now. Fine? Alright. Because he has added value to it. Now, this person, okay, this is B here, which is the manufacturer. He has created worth 900 worth value in it. So he will pay again tax of 10% on it. Right? Okay, so there is one thing to be noted down. This is not 10 rupees. He has created worth how much? 90 rupees value. So he will pay 10% on 90 rupees. So that will be equal to 9 rupees. Okay, that will be 9 rupees. Fine, to the government there he will pay the tax. He has created worth how much? Added another value to it, around 900 rupees worth. So he will pay 10% of 900, which will be how much? 90 rupees as a tax. Okay, so every step the value has been created, some tax has to be paid to the government, and this is what is called, earlier it used to be called as value added tax, now we call it as GST. So see, tax will be implemented at every step of value creation, and this is what we still follow here. Now comes here, what is CGST? There are different types of taxes: CGST, SGST, and IGST. So CGST is basically, we call it as the central GST, or CGST is collected by the central government when the sales are within the states. For example, there is state we have in India, okay, say this is, for example, say Uttar Pradesh. This is, say, for example, say it's not going to be Uttar Pradesh, say Madhya Pradesh, for example. This is Maharashtra. This is, say, Karnataka. This is, say, whatever, okay. And this is Hyderabad, okay, there is Telangana and Andhra Pradesh over there, right, like that. So if there is a trade happening within the different states of India, then the central government will collect the tax. If it is happening within the state only, then that is called as SGST, and it is collected by state only. Okay, SGST is collected by the state, while CGST is collected by the central. Then there's something called here, okay, within the states, okay, within the states here, which means it can be within the state here, within the state here, also within the state here, inside, okay, in the state only, right, in one state only there's a something happening, okay, something is being sold, then yes, tax will be collected here. Then there's something called IGST, which is called integrated GST. It's collected by the central when the sale is outside the state here. I think I just committed one mistake here. If it is within the state, means inside the state, something is happening, okay, some sale is happening, then the tax will be collected as a GST, and the GST will have two parts in it, which is called CGST, and another will be SGST. Now it will be collected under the headings GST, generally is half. So certain amount of tax will go to the central government, right? If it is 10%, for example, so 5% will go to the central government and 5% will go to the state government there. Okay, now it is within the state. I made a mistake in saying that, right? If it is interstate from, say, Madhya Pradesh to Karnataka or to Maharashtra, so there will be, we call that interstate, and which is outside the states, and that there will be IGST will be charged here, and again it is collected by the central government here. Okay, so remember, there's one confusion, yes, by mistake, I said it is within means inside the set. Okay, if this is Karnataka only, anything happening inside the Karnataka, not happening, but everything is anything is being sold inside Karnataka, right, will be collected by central government and the state government both half, right? So, and if it is something happening, some sale happening or some kind of trade happening between Karnataka and Tamil Nadu, right, then the central government will collect it as IGST. Okay. What are the rates of the GST? GST is levied on the multiple rates. It can be 0%. If it is exempted, we call it as 0%. Or it can be up to 28% maximum. Right. So maybe 5%. For example, if you buy any furnishing items, it will be 5% tax, depending upon it. What is the what is the price of that item? If it is below 900, sorry, below 1000 rupees, then you have to pay. If you buy something worth below 1000 rupees, you have to pay 5%. If it is 1000 and above, then you will have to pay 12%. So there are different slabs for it. 18% tax. This is generally for services that we have around. 28% tax is also there. Presently, petroleum and liquor, right, is exempted from GST. Remember two things. If they come into the category, there will be a lot of revenue, not revenue, but yes, price reduction happen in petroleum. It is not there. State government directly to levy the tax and they collect it directly from there. This one, and another is liquor. Liquor is wine and all those. So they will collect the tax. The state government only collect the tax, and it's very huge amount. If the state government just put it under this GST, then the prices of petroleum and liquor will go down to very little amount of tax will be there altogether. IGST is CGST plus LGST rate here. Now formula, that is, you will be coming across the formula there, and it says if output GST is more than the input GST, then GST payable is equal to output GST and GST on the sale minus input GST on the expenses purchasing. Okay, you may not be able to understand, but the formula you will have to write it. Okay, make a note of it, but I'll explain this to you how it happened. Considering that there is a manufacturer, and he manufactures what, say, clothes. Now, where is it manufactured? Say one place, place A. Somewhere, place A. So what he sells it to the whom? He sells it to the distributor. Now, what is the concept of distributor? For India is a huge country. Take it in this manner. India is a huge country, right? Fine, take it in like that. Okay. Now, this is the hub where, say, clothes are being made, for example. Manufactured. Generally, the Ahmedabad, Surat, and Maharashtra, these are the areas. Now, what happens? The people over here also need clothes. Right? People over here also need clothes. People over here also needs clothes, right? So what will they do is, this manufacturer will distribute it to somewhere over here, and say you can take the area, this particular entire area, you can serve it. He will give it to some of the distributor over here, say cover this area. He will give it to someone over here and say cover this entire area. He will give it to somebody over here and say cover this entire area. So he will have certain distributor in different parts of the country. Okay. Now, if this is the distributor, and okay, what he will do, he will sell it to somebody, because this is, say, for example, the South India, entire South India is there. So he will have a place like Bangalore, Chennai, right? And then he will have Kerala is another state there, Andhra Pradesh, all of these are there. So now one distributor is there. So again, it needs to go to the consumer directly. So what will it do is, say, it cannot directly give it to the customer. So what it can do is, it can say, in the city of Bangalore, he can have, say, Bangalore can be divided into 4 parts, and say one part will have a wholesaler here, north. Another part, this will also have wholesaler. So he will sell it to the wholesaler. So manufacturer will sell it to the, sorry, distributor will sell it to the wholesaler. Now wholesaler on the other hand will sell it to all those small shops or any shop which is nearby your place. For example, this is entire northern part of say Bangalore. So Bangalore itself is a huge place, so big one. So okay, so it needs to go to the different parts. So for example, this is Holimau, this is BTM, this is JP Nagar, so on and so forth. So there could be a shop over here, there could be shop over here, there could be shop over here. So what it can do is the wholesaler will sell it to these people separately. So wholesaler is selling to the retailer, right? We call them as retailer. Now retailer will sell it to consumer directly. Customer means consumer who will consume it. Now understand this. Since manufacturer has added some value to the cloth, okay, so he should pay certain amount of tax, and that is what is, for example, he makes it for 100 rupees. Say for example, the rate of tax is 10%. So he will pay 10% tax to the government, right? 100 rupees worth he has created the value. So he will pay tax. How much he has paid on 100 rupees? 10 rupees he has paid to the government as a tax, as a GST, right? Now then since he has sold it to the distributor, okay, why will he pay? Because he has created worth 100 rupees and sold it to the distributor at 100 rupees, so he has to pay a tax to as a GST. How much? 10 rupees to the government. The distributor will sell the same thing at 200 rupees. To whom? To the wholesaler. So he will collect a tax from the wholesaler. The wholesaler will pay the tax to him. How much? 10%. So 10% of how much? 200. And how much is 200 rupees? Tax of 200 rupees. So GST of 10% or 200 rupees is how much? 20 rupees. Now since distributor has already paid, okay, 10 rupees as a tax to the manufacturer when he bought it from him, he will not pay the entire 20 rupees to the manufacturer, to the government here. What he will do, he will subtract 20 rupees, 10 rupees from 20 rupees, and he will pay 10 rupees as a tax to the government here. Because out of 20 which he has collected, he will pay only 10 rupees to the government, because he has already paid 10 rupees earlier. He has already paid 10 rupees earlier, so why should he pay extra? So he will pay. Remember, every merchant is supposed to have a GSTIN number. So he has a GSTIN number, unique number. He also has a GSTIN number. He also has a GSTIN as a number. He also has a GSTIN as a number, right? So the tax which he has collected, this person, manufacturer, from the distributor, he will pay to the government mentioning his own account and saying that yes, it was collected from this GSTIN, unique number. So when he pays the tax, it is found that in the record that 10 rupees has been already paid to the government as a tax, right? So he will pay the extra 10 rupees which is left over. Fine. So remember, this part they're talking about over here, that is input GST is more than the output GST is more than the input GST, then output minus input, output minus input. So that is output GST minus input GST, right? Input is whatever he has paid earlier, output is whatever he has got it from the customer. So for him, this is the output GST, right? And this is the input GST. He has already paid it earlier. So output minus input will give you the 10 rupees, which is the tax, the GST he has to pay to the government, fine, using his own unique ID. Now this one, he sold it to the wholesaler at 200. The wholesaler sold it to the other one at 300 rupees. See how much tax he will collect at 10%? 30 rupees. So he has already paid by buying it 20 rupees to the wholesaler. So he will pay how much? So this is the output, this is the input. He will pay again 10 rupees to the government, right? To the GST department. How much? 10 rupees. Okay. To the government. Same way, this person, the retailer, sells it to the customer at a rate of 400 rupees. Fine. So how much he will collect at the rate of 10%? He will collect 40 rupees. Now this 40 rupees, he has already paid 30, so he will pay 40 minus 30, 10 rupees to the government here as a GST. So you can see whoever is creating the value in it, right? How? Because they have taken the cloth from this place to the nearby place to the consumer. So he has added some value, he has to pay some value tax, which is 10 rupees, everybody, right? So this is somewhat something similar to value added tax here. So this is the concept that we have about GST, and once we start solving all of these questions based on it, then it will be more clear to you.